Take a quick look at rates here. That's your yield on the 10-year, $2.34% rather. Rafferty Capital Markets banking analyst Dick Bove joins us now. Are you concerned, Dick, with the sharp increase in yields in the last week or so?
Well, you know, in terms of the holdings of banks, since they own $3.5 trillion worth of securities, you know, when you get a 7 or 8 basis point increase in the rate in a 1 week period, you know, it's going to reduce the value of those securities, which makes it more difficult for the banks to make money.
Well, in the meantime, the banks just had that so-called stress test. I always think it's a joke, to be quite frank with you. I don't think that they really know how to gauge human behavior when catastrophe is happening. That said, they passed for flying colors. They were able to return over $100 billion to shareholders. So does this now prove a point, hey, maybe these stress tests work and they're necessary?
Well, I mean, I think I agree with you. I think the stress test can't show what people are really going to do when a real recession develops. So I don't think that they're very accurate at all. Also, I don't agree with the fact that the government tells the banks how much dividends a bank can pay its stockholders. I think that's the essence of socialism. But I think that, you know, basically, when we get through all that, the banks are in very healthy condition. They've got, if you go back over the past 30 years, they've got more equity as a percentage of assets. They have more liquidity as a percentage of assets. Their loan-to-deposit ratio is one of the lowest that we've seen going back 40 or 50 years. So the banks are in very healthy condition.
Well, they're in healthy condition, and now Wall Street is taking notice. We saw this rotation start about 10 days ago, and even today, banks are looking pretty good. The Goldman Sachs of the world, while tech names are starting to sort of suffer here a little bit. Do you think at this point, bank stocks might be a better investment than tech stocks?
Well, I can't answer the question because I don't know anything about tech stocks, but I do think that when you take a look at bank stocks right now, you know, you're dealing with all of these issues on health care and taxes and other stuff. As far as the Trump administration is concerned in banking, everything they want, they're getting. They're making a massive change in the structure of the banking sector, which is what they promised they would do, and I think it's going to be incredibly effective. I mean, you've got a banker who's going to be running the OCC. You've got a guy who wrote the Financial Choice Act who's going to be running the FDIC. You've got a guy who was investing in financial companies who's going to be the Fed governor in charge of bank supervision, and you're changing the focus of where the regulation comes from the Fed up to the FSOC, which is run by the Treasury Secretary. So, you know, whatever may be happening in other areas concerning Trump's initiatives, he is winning everything in banking.
All right, and bank stocks are starting to reflect that. Dick Bove, thank you very much. Really appreciate it.